Hi, and welcome to my bank reconciliation screencast. A bank reconciliation is the process of reconciling the differences between the cash balance on the bank statement and the cash balance in the company's records. A bank balance is prepared as follows. Step 1. Reconciling the bank balance. The first step is to adjust the cash balance reported on the bank statement to the company's actual balance. This is done by adding deposits in transit, which are deposits that have been made by the company but not yet cleared the bank as of the current statement date, and subtracting outstanding checks, which are checks that have been distributed but not cleared by the bank as of the current statement date. Not to forget dishonored checks, which are insufficient funds from a payer's account, otherwise known as bounced checks. So, for example, deposits in transit are added and outstanding checks are subtracted from the balance per bank statement to give the actual cash balance. Once all adjustments have been made, the adjusted bank balance should equal the cash balance to be reported on the statement of financial position. Step 2. Reconciling the company's book balance. The second step is to adjust the cash balance reported on the company's books to the actual cash balance. A company's book balance may differ from the actual cash balance, so the following adjustments are made. The first one is a credit memorandum, which is an addition to the cash balance on the bank statement for items such as a collection of receivables, the collection of interest or notes, or errors made by the company. The second is a debit memorandum, which is a notification of a subtraction from a cash balance on the bank statement. For example, fees charged for banking services or dishonored checks. So, how do we adjust the statement? For example, the credit memorandum has been added and the debit memorandum has been subtracted from the balance per company's records to achieve the actual cash balance. Step 3. Finally adjusting the cash balance. Once the bank balance and the company's book balance have both been reconciled, the company's cash balance must therefore be adjusted to the actual cash balance determined by the reconciliations. The third step is to record the journal entries necessary to adjust the company's book balance to the actual cash balance. These journal entries seen here are based on the credit and debit memoranda and errors identified during the reconciliation of the company's balance. Here's a final example. Step 1. We reconcile the bank balance by adding deposits in transit and subtracting outstanding checks. Step 2. We reconcile the company's book balance by adding credit memorandum and subtracting debit memorandum. And step 3. Finally recording the journal entries to adjust the company's book balance to the actual cash balance. Thank you for listening.